All right, guys, welcome back to another episode of The Deep End. As per usual, we got my main man Ari here, but today we're joined by a very special guest, our friend Danny. Danny, what's going on, man? Happy to have you here on The Deep End. I'll pass it off over to you in just a moment, but as per usual, guys, we were talking beforehand, started getting into some pretty good conversation, and figured, we just need to. We always do this. I don't know why we always do this. We just said, let's just hit record. Let's pick it back up where we left off. Ari, you wanna set the stage for us? What were the three of us talking about? We were getting into something good.
Gladly. So let me just say that we were about to hit record, and Danny had actually stopped us to ask two questions. And one of those questions was about fatherhood for Ryan. Very, very nice, simple, pleasurable answer we got back from Ryan. The second question was also geared towards Ryan, but it was actually inquiring about if I've ever asked Ryan to do any crazy excursions or anything like skydiving, base jumping, you name it. And the reason for that is because actually right now I did drop a video that Danny and I shot last week for Masters of the Market. And after that chat, Danny and I spoke for like a solid hour. You all are gonna hear Danny's story here as well. It's inspiring, it's motivating, but we somehow, Danny, we got to talking, and Danny had said if I'm ever in Miami that we should get together and meet in person. And that's when my mind goes, oh yeah, we should do skydiving or jump in with sharks, something crazy. Danny, before I pass it off to you though, because really what we were talking about was living life, I feel like, to the fullest, or at least that's what I was thinking. So I just want to say that the way I live life is really also the way that I like to invest these days. And that is going all in, being 110% in everything I'm doing and feeling all of life, feeling my investments. And so I almost feel like, I'm just rallying up Danny to drop an insane story because I know the story that Danny's about to share, which is his own story. I'm excited. Danny is a guy who lives, though he's not going to go skydiving, he does live at 110%. And so, Ryan, I'm going to just pass it over to Danny. Danny, give us just like the elevator pitch here, a little bit longer of that elevator pitch on how you got to Miami from where you came from and from how you grew this portfolio from almost literally nothing to where it is today.
Yeah, man. Well, first of all, I just want to thank you both. I have been watching the two of you for a long time now, individually, and then when I remember the first day, the first show that you guys had with the Deep End, and I was watching that. So, for me to be sharing my story with you is such a pleasure. Before I go into my story, I just want to tell you that when Ari was saying that after the show last week we started talking, I don't know how I came to say something like, hey, I cannot go to a second floor and go on a balcony because I'm afraid of heights. And then Ari looks to me and he's like, yeah, man, whenever I'm in Miami, we're going to go skydiving. So when he means that he lived life and you can follow his story, he really means that. So I just wanted to drop that there. Man, my story, like I'm an immigrant from Cuba, grew up in Cuba until I was like about 21 years old, moved to Canada, got into kind of living life not knowing where I was doing at all, not even knowing about investing or anything like that. Got into a lot of consumer debt. That's what I did. Paycheck was coming in. I had this kind of bottom line jobs that I did for a while. And I remember I moved to Canada in January. I left Cuba like it was 27 Celsius, I believe. That day that I landed in Toronto, it was like minus 12. So I went like,
Wow.
holy man, like this is super cold. And so anyhow, I just battled through it. And again, just money was coming in. And for this guy that came from a third world country, it's like, man, the sky is the limit. Now I can go and buy this and buy that and credit card debt and loans and car loans and this and that. Long story short, in 2010, I filed for bankruptcy. So I got fed up with all that stuff, filed for bankruptcy. I got discharged, met my wife late 2009. And 2011, we bought our first house. And that's it. My wife has always been kind of investing through her work. program, like our RSPs in Canada, similar to a 401k here. But we never talk about money or money habits or, investing. I knew that whenever I did a bankruptcy, I told myself, I'm not going there ever again. Like, that's it. Like, bottom line. If you are talking about bottom line for anybody that gets into money habits, bankruptcy will do it for you. So, and that's it, man. I just get going. Never again. I look back. That was the last day that I carry a balance in my credit card. I never had credit card debt or any kind of consumer debt, if you want to call it. And Ryan, you're going to get a kick out of this. About 2016, 2017, a friend of mine called me. And I remember I was taking a walk, and I can pinpoint the moment and place where I was. And he said, man, I'm kind of learning a little bit about investing. And I'm gonna send you a link of this guy that has a show in the US, a podcast that people called in and they kind of answer questions, and the guy goes crazy, man, with people in debt. Well, that guy was Dave Ramsey, the Dave Ramsey show. So, man, I tuned in and I went like, oh my God, this guy goes like crazy on people, man. Especially those that went like, hey, I make 50K. Can I afford like a brand new Mercedes or something like that? And you know how he goes on his show.
Yeah.
So that was the first time that I kind of looked at anything that had to do with investing. Just to step back, just one step there. When I got my first full-time job, they asked me, hey, do you want to contribute to your RRSPs? And I said, no, man, like at this point, I just need to make money, and I had to take care of my family back home in Cuba and the family in Canada. So I said no. And I remember, Ryan, at that time, I went like, one day I'm going to buy a house. This house is going to grow in value like crazy. By the time that I'm 60 or 65, with all the money that I have saved, that's it. That's the recipe for retirement for me. I don't need to invest. I don't need to do nothing else. Obviously, looking back now, I had no clue what I was talking. So yeah, I started looking at the Dave Ramsey, and my body went like, hey, I'm going to start investing through my RRSPs. So at that point, I was self-employed, so I didn't have a match or anything like that. So I just went to the bank, sat with the lady at the bank for investing, my wife and I, and she was, okay, what do you want to invest in? Like, we have mutual funds for this, and that. And I was like, I don't know, you tell me. And I
Right.
remember she said, okay, I'm going to ask you a few questions, and that's how I'm going to know where you need to be. What is your risk tolerance? Like low, medium, or high? And I just want to protect my capital, and whatever grows after that, I'm be happy with that. She went, okay, I got it. So she invested me in who knows what back then. And that's it. I was investing a little bit, but that kind of mindset of investing never clicked until way later on. Wanting to carry on with my life. My wife again kept, contributing to her RRSPs. In 2021, we moved to the US. I ended up moving to Tampa. We bought a house. I was about 38 years old at the time. We were able to pay cash for a house and be mortgage free. And that was one of the
Wow.
biggest things kind of pinpointed where we were going to move into the US. And kind of
Right.
Tampa was the place that we could buy a house, and kind of a city that we kind of thought that we would like. All this was when COVID was happening. So
Mhm.
we end up buying that house, Ryan and Ari, without us being in Tampa ever. We had friends there that kind of show us around, videos here, video there. Like Canada at the time had it was very strict when you will get out of the country to go back and quarantine and stuff like that. The kids were in school, so like online school back then. So anyhow, bought the house in Tampa, moved here, and my wife was working for an American company, so she was transferred to the U.S. and roll into the 401k sponsor plan. Target date fund that they put her in, and that was it. And like a year or so later, my best friend comes to visit us, and he pulls out his phone and he goes, man, I'm gonna show you this thing that I'm doing that is gonna blow your mind. So he opens his Robinhood account, and he was day trading in a way, and he went like, look what I'm doing. A friend of a friend told me that all that I need to do is go and buy this stock at a certain price. When it goes 50 cents above or $1, sell, and then you do it again. And I went, well, how much money have you made? So he opens his history, and he's like, $100 here, 50 there. Ryan, I remember sitting there when they left, and I went like, man, this is what I'm going to do. I am
Yeah.
going to be an investor. And I don't need to go to school. This is gonna be my life from now on, man. Not knowing what I was doing, obviously.
Sure.
So what do you think that happened? Next day, I went and opened an account, a brokerage account in Robinhood, not knowing what a brokerage account whatsoever. It's just that I knew that's what I needed to go. And I started buying that and selling and making $40 there, 100 there. Long story short, a few months or a year later, I ended up putting like a $10,000 into that account. And at some
Uh-huh.
point, the value was $600. I actually
No.
just sold that a year ago, I think, last year to harvest the taxes. And I ended up selling it, right. And I think that it was for like $900 or
Jeez.
$1,100. So I ended up losing like 9K on that, investing kind of route. So I
Yeah.
went like, man, there is a better way. So fast forward a little bit. Later on, I went like, I want to learn investing, and let me go back. Went back to start watching videos, and I came across this podcast from the Money Guys. I believe that they are in Tennessee, I think, and they were
Mhm.
more aligned where I was, mentally now with my relationship with money, and I just needed to know how to invest, right? So I went in there and started learning, and hey, the 3 fund portfolio and this and that. They were talking a lot about the Roth IRA account, and that was the first one that I opened for my wife and I. Went and started investing, and I did, S&P 500, international, some bonds, and that's kind of I set it up. And after that, I remember watching another show, and they were saying, "Hey, remember, if you have everything into like Roth, or if you have everything into deferred accounts, you may want to have a strategy that may work for you when you retire." And if you ever want to retire early, there is an account that's the one that is going to bridge kind of to get there. And that was a taxable account.
Mm.
Looking back, it's like, hey, that was the same Robinhood account that I kind of opened way back. So I did. I opened my taxable account and I started investing there. Late 2023, I got a full-time job. That's a job that I have right now. Started contributing to the 401k through there. Kind of start changing my wife contribution from that target date fund to like an S&P. And that's kind of what I got to now, to what I invest now. Investing is like something that I didn't know that I was going to be that passionate about. I
Yeah.
love when Friday comes, I'm happy that the week is over, but now there is 2 trading days that we cannot have. Now we have the weekend. We have to wait until Monday. So yeah, man, that's kind of like an overall of where I came from and where I am now.
Wow, man. I
Ryan,
That's pretty crazy story. Go ahead, Ari. Sorry.
what Danny left out, and I'm just gonna jump. Everyone knows me. I'm going right to the ball, right? What Danny and I spoke a lot about, and first of all, Danny, you left out a couple of pieces there where like you lost it all a couple of times, but like the persistence that Danny has, and he just kept coming back, just kept investing. Very, very inspiring, and literally from someone who came from a third world country, Cuba. I mean, that's just not easy, but it's also the motivational factor that's there, set in stone. But here's something that Annie and I really spoke about, which is this kind of confidence and investing to go all in and to not play small. And so something Danny and I spoke a good deal about was how so many investors today are playing small or have quite a bit of fear. And one of the questions Danny had, and when it comes to sleeping well at night, which I said I think Ryan really likes to sleep well at night. Good night dreams at night, no worries, no fears. But Danny and I are sitting here saying, what is it going to take, Ryan, for us to get some type of growth stock in your portfolio? Let us know.
You know, that's such a can of worms, guys. Like, first and foremost, the S&P 500 is my second largest holding, and it's growing every week. But also, I've got plenty of growthier companies in my portfolio. Clear, Secure, Williams Sonoma. I think Snap-on's a great growth company. Sure, it's boring. It's kind of a sleepy one, but I have plenty of companies that are growing at a pretty aggressive clip. They might not be the standard quote unquote growth stocks that everyone likes to turn to, but I've got plenty of companies that are growing, and I'm doing just fine. I was actually looking at my performance, not to go on a tangent. I was actually looking at my taxable accounts performance over the past, well, really since I started posting videos on YouTube, like October 2020. So going back 5 years and a quarter now, and I'm still beating the S&P 500 investing in my, sleepy, boring dividend stock. So I think I'm doing okay. I'm going to leave it there.
Yeah, man. I just wanna go to a point now, Ryan, and say that if people think that what you are doing is maybe taking the easy route in investing into individual stocks, they need to think again. And I'm gonna tell you why. Whatever you do, man, kudos to you that you go and you do the research for these companies, and it's a lot of work. And I'm gonna tell you why. In one of my many selling and buying stuff, funds in my taxable account, at some point I went into individual stocks. And I remember, seeing videos from you guys, especially Ari, saying how he was trimming his portfolio down to whatever many individual holdings. And I went, okay, well, let me just try to do something like this. And I remember I went into Microsoft, I
Hmm.
went into Visa,
Oh,
Google,
yeah. How could I forget Visa?
Altria Group, and what else? And Realty Income. So I
Yeah.
can tell you whether whenever I set those up and I bought like a little bit, like whatever amount of money into them, and the first time that I wanted to put some serious money into this, I went like, how do I distribute this now? Like now this for me is a headache. Like I just want to make things simple. So my point with this is like you are doing a lot of people may think like your investment profile or whatever is easy. Well, think again, because going and doing all the research and knowing where to put your next dollar to. So I just wanted to bring that up. But anyhow, yeah, we were talking about how Ari went like a 180 degrees from kind of the investing profile that he was to going more to the growth side. So I think that that's where that comment came from.
Oh, that's totally where it comes from. It's worked really well for Ari since he's made that change, which is why he likes to poke me about it every so often. And it's funny because it gets some interesting responses in the comments, but he's just messing around. We're just having a good time, and it's to Ari's credit and to everyone's credit, it's worked really well. So it's like, yeah, Ryan, why wouldn't you do that? But it's like, I'm doing okay. I'm doing my thing. I'm doing fine. I don't know how I forgot about Visa. I feel like for some reason, I always forget about that one, but it's like one of my largest individual positions. But not to hog the spotlight too much, Danny, I was going to say a few moments ago, man, like pretty crazy story. I didn't know a lot of those details. Like we've obviously chatted a few times over Instagram, and I didn't know any of that stuff. And I don't know. I feel like I have so many thoughts. I don't even know where to start. I guess one of the first questions that I have now is, if you don't mind sharing, is where's your portfolio at today? Starting from zero, actually even being like negative, going into bankruptcy, starting fresh, kind of starting over again after day trading and trying your hand at that. Where are things sitting at right now, if you don't mind sharing? If you don't want to share, that's fine too, to the extent you feel comfortable.
Yeah, man. Yeah, for sure. Yeah, one of the things, I don't know if I will go into details about the total amount of my portfolio,
Yeah, that's fine.
but I just wanted to say that it's way over the six-figure mark, which I'm
Okay.
super proud of. Um, but yeah, man, it was just a lot of like Ari and I was talking last week, and it's like there is not like this crazy recipe that you need to follow for you to be successful, right? Like even
Yeah.
if you go all in into the S&P 500 fund, it is proven that you're gonna build some serious wealth. It's just
Mm.
the mentality of putting it in there every week, a little bit here, a little bit there. So it's more about the more that I think about this, Ari and Ryan, it's not so much the actual putting the money in. It's just obviously the biggest thing is the mentality, just to leave it alone. And you
Yeah.
guys were talking about this last week with Spencer, I think, and I think that you guys talk about there was a study from Fidelity that just came out that these accounts for people that have passed away are the ones that have performed the most, and there is only one key thing in there. Well, nobody could do anything to them, so just leave it alone. So that's kind of, and going back, Ryan, to where my portfolio is at now, it is very simple. I today hold about 60% into the S&P 500. Now I actually just last week was something that I'm proud of, and I just maxed our both of our Roth IRA. We had to
Nice.
do like a backdoor conversion because of income limits and stuff. So now my growth kind of went is getting closer to 20% now, because I put all that into VGT, the
Mm.
Vanguard Technology Fund. And I have a little bit of covered call ETF in there and Johnson& and Johnson a little bit there. That's the only individual stocks. My wife works for Johnson& & Johnson, and she gets kind of like stocks and stock options part of the compensation. So I have a very, very simple approach when it comes to investing. And I go back to those 5 individual stocks. Now I just want to have one ETF that I put money in, set it there, let it grow, and I'm gonna be okay. Like I know that I'm gonna be okay by having
Yeah.
that simple approach. So if somebody tells you that you need to go to MIT to get a certificate to invest and to get to where we are today, just tell them no. Send them skydiving with Ari.
Yeah, there you go. Well, it's funny. I think you bring up kind of an interesting point. I think especially as individual stock pickers, I think sometimes we have a tendency to think that if our portfolio is doing well, if we're seeing positive returns or great returns, I think sometimes we think it's a lot of our own doing. I think we kind of give ourselves too much credit in picking the right stocks at the right time, while undervaluing how much, like you were saying, how much persistence plays a role, consistency, and more than anything, time. Just like letting time do a lot of the heavy lifting. So I think it's easy to give ourselves too much credit for the right decisions that we make when there's so many other factors beyond just like picking the right stock at exactly the right time that plays a role in building wealth.
Yep, 100%.
I like that, Ron. And I just read something earlier today, and it basically it was alluding to the fact that we always go towards the pessimistic viewpoint. Always, we're like hardwired to look at the negative, and if you can rewire your mind to begin to look at the positive, I mean that's really the beginning, foundational, I feel, building blocks of the abundance mindset, which I feel is very important. And to Danny's point, like a lot of this is a mental game more than anything else. And I think it does start with the abundance mindset. I mean, Danny, you went, into debt and then climbed out of debt. I'm actually curious to know though, I didn't ask you this the other week, which after we got off, I was like, I should have asked them when you got invested into the individual stocks, and you could blame Ryan and I for getting you into those. But I'm curious to know, like when you sold them, did you sell them at a gain?
I can remember, to be honest with you, I cannot remember. I know that I went back a few weeks later. I don't know if I even held them for over a month, but I just got fed up of this is not simple for me. And going back to the mentality what I was when I had a bankruptcy, and it was kind of going back there my mind on you have to pay this loan now, this credit card is due, and this and that, and it's like no man, there is thank God for ETF that I can find a simpler way. So to your question there, I don't know. I will have to go back and look, um, look back there. But if I'm not mistaken, Ari, I was looking. You and I were talking the other day, and we were talking about, Google. I believe that when I buy Google, I don't know if I'm mistaken with Visa or whatever. I think that I bought that at $178 a
Either
share.
way, that's crazy. Either
Dude,
way,
if
that's
I were to
crazy.
hold that today, that will be like I'll pay for the skydiving trip for you guys. So,
Well, I was gonna say because the companies that you actually chose to pick, they're actually all 5 of them standout companies. And if you would have just held on to those 5 until today, this very conversation, I mean, I'd be so curious to just see how much money you would have made from them. Not to say you didn't make money how you re-strategize. You ultimately did, which makes you the winner either way. But it's just interesting to
Yeah.
me, how some people could be so comfortable with individual stocks. I've gotten very comfortable with individual stocks, of course, over time, but I've simplified my life. Ryan, I think we spoke about this. It's like it's so much easier to throw money into a fund because I don't have to worry about it. and I can focus elsewhere, i.e., making money to then throw in and kind of double my lot. Ryan, have you thought any more about going towards the fund route, or do you think because it's a pure enjoyment for you with the individual stocks, you think you'll stay there?
Yeah. Never say never. As you were talking, it's funny because I was thinking, I feel that same exact way about the companies that I own. Yes, I own individual companies, but I feel like I own companies that I don't have to worry about, that I don't stress about. Kind of like we were talking about earlier. Like, I sleep very fine at night holding the companies that I own. And I think when like my personal investing strategy, that's a big part of it. I don't want to invest in companies that I'm worried about, especially in the short term. And so, yeah, I mean, I feel very comfortable having the companies that I do. If I didn't, if I was stressing about them on a day-to-day basis, if I was worried about what the share price is doing today or what the share price is doing tomorrow, I probably wouldn't own these companies. And so I think, number one, the companies that I own allow me to just, feel good owning them. I just think they're good companies. But also, I think the purpose of why I own them too helps as well, and the time horizon. I think having a long time horizon, being able to think not only 20 years down the road or 30 years down the road, but knowing that ideally I'd like to own these even after I pass away. I think that really helps, being able to zoom out, and also knowing that there's not just this share price that I'm worried about. There's this whole cash flow component that adds an extra dimension to this investment. And I also think that component helps me think more like a long-term business owner, which I try to keep in the back of my mind at all times. That's really what I'm investing for. Like, I'm investing as if I am an owner of these businesses. And if you approach it from that lens, then you have to have a long-term mindset, and you can't worry about the things that happen on a day-to-day. And it's also, as far as the share price goes, during those times, the day-to-day, it's kind of irrelevant. You know what I mean? So I think all those things combined make me actually feel pretty comfortable holding the individual companies. But if that ever were to change and I got bored doing what I'm doing and I'm ready for something that I just don't have to ever think about or worry about, and I just wanted to be completely hands-off and on autopilot, then I won't even second guess it. I'll just go all in on funds. And I think that'd be a pretty easy thing to do. But for the meantime, it's working for me. I enjoy it. I don't stress about it. And it's worked out pretty well so far. So I'm gonna keep rocking with it.
Yeah, man. I just want to add something there, right? That's just the way that I go about my life. It is, and the main thing here is that you are happy doing what you are doing. You are not there going and crying and complaining to say,
Oh,
"Hey, my portfolio."
I am. You just don't see me. You just don't see the tears. That's off camera, exactly. So,
No,
sorry
like
to
all
cut you
those
off.
jokes. No, it's all good, man. Like I said, Ryan, I have like a very short fuse for people that are complaining all the time. And if
Oh
you
yeah,
are complaining and going about negative about life, I just gonna put you aside and I just go on with my life. So the
yeah,
point that I want to make is like, hey, even if your portfolio is not growing at the same rate of somebody that is going more into growth, but you are happy. Like you are happy the way that you are doing it. It's not that you are going and saying, "Oh, poor me, I'm investing in this way, but I'm not catching up to the next guy, next to me." So I think that I just want to make that point that whatever makes you happy and you sleep well at night, just stay with that strategy. And remember, it's your money, the one that you are put it in, and the one that you are invested in is not somebody else's. Like, people are so quick, man, to go in and judge and start saying, "Look at what this guy is doing." But just go and take care of yourself, man. Like, there are so many times that I have watched a video and it's like, well, I don't agree. I don't see eye to eye with the same mentality that this person has because of whatever reason. But I don't go there and start putting like hate comments and stuff like that. Maybe I want to understand, because maybe you have an explanation to me that it makes sense. I just haven't heard it yet. So I just want to say that, man, like, whatever makes you happy, stay in your lane, you ignore the noise, and that's
yeah.
it, man.
Well, thank you, man. I really appreciate that, and I think that's you bring up a good point. Like, as we talk about a lot, there's definitely more than one way to skin the cat, and there's more than one way to build wealth. And like I'm doing so with my strategy. Ari's doing so with his, you with yours, and the day traders out there, some of them are building wealth with their approach, the momentum investors, the technical investors. There's so many different ways to do this, and it can all work. And so with that said, there's no need to criticize what other people are doing,
So,
especially if it doesn't impact you. And in my case, like, it's not even like I feel like it's actually funny. Let me reword it this way. Sometimes I feel like I have to justify why I invest the way that I do, which rightfully so, I suppose. Like, if you're going to put yourself out there, you have to be able to explain yourself. But I also think the performance so far, I think it backs it up. Like, I think my compound annual growth rate in the portfolio is almost 16% since I started investing, over these past 5 years and some change. And it's like, I don't know if that's not good enough for someone. I don't know what to tell you, because I think that's pretty solid. So I don't know. I don't really know what to do with that. I'm sorry, but yeah, I don't know. Just a lot of thoughts about that. But I also am with you about the complainers. And unfortunately, on the internet, it's so easy to complain. It's so easy to criticize. It's so easy to judge without being held accountable for it. And I think that's why it's so easy. But what are you going to do? It is what it is. You just got to take those slings and arrows.
I'll tell you.
so
I'll tell you what you're gonna do. You're gonna find people who think like you think, and then walk together, invest together. Because Danny, I think one of the reasons we stayed on so long after that podcast the other week was because you and I share a very similar mindset. Ryan shares the same mindset. That's why we have a podcast together. But stop complaining and start taking action. Like, you're not the victim
No kvetching.
of your own life. No kvetching. Yeah.
Yeah.
And Danny,
No
you're
kvetching.
a testament to that. Coming from
Exactly.
Cuba.
Exactly.
I mean, Ryan, Danny shared a story with me. And Danny, I almost thought you were going to cry on the podcast, but you can actually see you were touched. You were talking about your parents, and I'm going to let you share this story. It's your story. But you were talking about your parents and how they would go to work and sometimes didn't have enough to eat for themselves because they were giving it to you and your siblings. I mean, can you share that and how that has shaped you?
yeah, man. For anybody that have come to from like a third world country, like, it's not easy there, right? And even for my family, my dad was a teacher, my mom was a teacher as well. Later on, they still were working in the educational system, but they were getting paid like once a week cash. There was no such a thing of like a debit or transfers or anything like that, and they had to make it last. We didn't have people living abroad that they can, help us out with money or anything like that. So there were times like it was tough, man. Like, I never had that conversation with my parents, but if I were to put all of my money today, I know that there were some days that they went out without eating meat or anything that was, kind of being together with the rice and beans for my sister and I to have. And I look back now, and I remember the day that I left Cuba, I went like, man, I have to die before I stop helping my family. Like, it's my time now to pay forward, just to pay back to them. So that mentality, like, I grew up for the longest time with one pair of shoes, like literally one pair of shoes to go to school, one pair of shoes to go out on the weekend, and the same pair of shoes to go out and play with my friends. Most of the time I went without shoes, back then, kids in Cuba, and you see the Dominican and all these countries, we go, like barefoot playing outside and running. But that for us was the reality. And I was happy, man. Like, I was happy. I had a good environment, loving parents. And my sister, it was the same. My sister would go to university away from the town that we were living. And, my dad will give her like 20 pesos at the time, which is probably back then, I don't know, 15, 20 cents US. But my sister had to go hungry at night after starting for exams at university and stuff like that. So when you have this, like, hey, I came from nothing and I'm able to do what I'm doing, nobody can look into you and say, oh, this is luck. Like, you are lucky to be where you are. There is no luck in this, man. Like, I put in the work, I made the mistakes. So for all those people out there that goes like, hey, Debbie Downer or whatever, like I cannot make it because this, and that. There is a lot of people usually worse than you are. And it's one of those things, Ari, that you and I talk like it's always look forward to the people that are ahead of you in life, as a motivation, but also look back because there is a lot of people that have it worse than you, man. And also for me, the biggest thing for me is being thankful. You guys have no idea how many times I'm sitting in the backyard and I look around and it's like, man, I don't deserve. It's not that I don't deserve. Like, never in a million years I thought that I will have what I have now. And it's not that I have anything, out of the extraordinary, but we have a house, we have cars, we go out on vacation, and now we don't have to think about money as a burden,
Yeah.
just a way of, living life. So for me, and again, and with my friends, the group of friends, like we travel together and we vacation together, and we are all of us, besides my wife that is Canadians, we are Cubans, and we look around and it's like, man, who would have told us 20 years ago that our life was gonna shape out this way? So you may look at somebody now and it's like, hey, I want to be like you, but maybe you were not along for the ride. Obviously, you were not along for the ride, and maybe if you would have to do what I did, you will go back and it's like, hey, I don't want that life. So, a lot of, yeah, I don't sit well with the people saying I can't and I can't because X, Y, and Z. So,
Well,
yeah.
I don't blame you, man. And you are, like Ari said, you are a true testament to the fact that you create your own destiny. And it sounds like there have been plenty of instances where you could have, when you've fallen down, you could have stayed down. But it is in each of those instances, it is within your control to make the decision to get back up and keep moving forward, and just continue to put one foot in front of the other. And that's what life's all about. That's certainly what investing is all about, because we get punched in the face doing this all the time. Even if you are like an ETF investor or a fund investor, you're not immune to the swings of the market. And, still, same thing during those times. You can only control what you can control. And in those tough moments, you can decide, no, I'm going to continue to stay all in. In fact, I'm going to double down. You want to sink me down 20%? I'll show you. I'll throw in another, in Ari's case recently, which I actually want to hear about this. I'll throw in
Yeah.
another 39 grand.
$38,000.
38,000. Sorry.
If
That's
if
crazy,
you
man, by the
think
way.
for a
That's a lot.
Yeah,
if
man.
you think
Like,
for a
Ryan,
second, if you think for a second that's all I'm going in at, in the coming months, I mean, just wait, man. I got a lot more firepower from other positions, and there's a lot of shifts that are happening. Danny and I were speaking off camera actually the other week about some of the shifts that will come in my portfolio, and I'm excited. Talk about really doubling down. I mean, this is 2026 is where I really put my money where my mouth is, as if I haven't been doing that already.
Where's the portfolio at right now? Are you for
It's just
uh
we're
go
getting
ahead.
some market, volatility, so it's sitting at around 140.
140? No, 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 no.
I'm
440.
sorry, 130, 130.
130?
We're talking about your portfolio, though, not Ryan's.
Yeah.
Oh my God! Wow! Yeah, 430. You're right. It's not Ryan's portfolio.
You're over there daydreaming about that cheeseburger is what you're doing that you were telling me about.
I am. Danny, before you jumped on, I haven't eaten yet, so I said to Ryan, man, I can't wait after this podcast. I'm gonna order a nice burger, and yeah. No, I'm sorry. So 130 is a totally separate goal I have in mind in adding to my portfolio, as a totally different front. So the portfolio itself is sitting around 430 right now.
Yeah.
Just at 430. And
Nice.
so, I mean, we're going to amp that puppy up. And I basically made a massive swing selling out. I'm done with the S&P 500. I'm done with the S&P 500.
Really?
Ryan and Danny. It's done. It's over.
Okay.
And where we're going, tech, baby. We're going all tech with a tech ETF. and then we're really going to go big on just a few individual stocks this year. And Alphabet is one of them. That's actually the main individual stock that I'm really going all in on. And the mentality this year is, talk about like, Warren Buffett's whole, hey, if you had a punch card and you can only make, the 20 investments. Well, I'm going to have a punch card this year. And if I can only have a handful, and I'm not even going to hit the handful, I'm just talking about doing, a tech ETF and then my top 3 tech holdings that I want to run with. And I want to play as if I own these companies outright. That's how I'm playing this year.
I wouldn't expect anything less from you, man. And I'm excited to see. I mean, we're only 20 days into the month or 18 days into the month, so I'm excited to see where you finish up the year. But good things ahead. Danny, I want to throw it back to you, man. So if I did my math right, you're somewhere in your, huh?
Ryan, just real quick, could you imagine if my portfolio value actually did sink down to 130? It's like, yeah, I'm going all in, baby. I lost everything.
You would,
Anyways,
though.
back to you, Ryan.
Yes, you would. You totally would.
I would. Even if I lost everything, I'd be right back and doing what I'm doing.
Yeah. No, but I was going to say, throwing it back to Danny, if I did my math right, you're somewhere in your early 40s. Portfolios above 6 figures. What's the grand plan here? Do you have any, when you think about retirement or reaching financial freedom, what does that look like for you? When are you thinking about that? Is it TBD? What are some of your thoughts around that and like the end goal with your portfolio, I suppose?
Yeah, man. So I'm 42. I'm 42 years old now. So my goal with that, Ryan, is I am very, very fortunate to have a job that I love and I like what I do for work. So I like that date. I don't know when it's going to happen, but I'm
Hmm.
going to tell you 150% that I'm going to retire early. Like 60, 70, 65, that's not going to happen for me. That's what I think right now, right? So again, fortunate that I still have a job that I like, right? So for
Hmm.
me, it's like now I want to take advantage of contributing to my portfolio the most that I can, right? Now that I can. Maybe, and again, like Ari and I were talking the other week, you never know. Obviously, it happens so often that you are so happy at your current employer and managing changes or anything happens and you have like a 180 and all of a sudden you have somebody that you don't want to see ever in your life again. So that's what I have been working my whole life for. And I'm just going to kind of to give you a little bit of the way that I think when it comes to this. Ryan, for me, it is so important for me to have the financial security of looking at somebody on their face and say, hey, I'm not coming next Monday, compared to going and spending that money in stuff that I don't need or that is not going to make me happy. So for me, it's like, hey, I want that financial freedom. If ever happens to me, I'm not afraid to tell you I'm not coming back on Monday and I can just go and sit around for whatever many months without having to worry about my financials. So that's
Yeah.
number one. So number two, man, I'm just gonna keep going and adding into that portfolio. Whenever that day comes, it comes. But yeah, my wife and I, we are super happy with what we do for work. That is just taking advantage now. Like later on, I don't have to do like I don't have to contribute as much. And that was such an eye-opening for me the other day that I went and it's like, let me put my portfolio into a calculator and see kind of what Ari did a while back, what it's gonna look like a few years from now. And if you haven't done that, go and do that exercise. And it's going to blow your mind what
Yeah.
you can go and take a look. And he's like, hey, man, now my portfolio is doing more of the heavy lifting for me. Now my contribution is like a little bit of, the icing on top of the cake. But when
Yeah.
your portfolio gets to certain size, and Ryan, I know that you are experiencing that now
Yeah.
compared to at the beginning of last year. Now you see like your swings are bigger and now it's not hundreds, they are thousands whenever the market swings. So yeah, man, I'm just gonna. There is not a set day yet, but I know that it's gonna be early. And I just see that I live life. as the way that I thought that I was going to live it when I started this journey, kind of by my rules in a way that, hey, I'm doing what I like to do. I don't have to stress about money, and life is great, man. Like there are so many times, guys, that I will look at my wife or we're having a drink and it's like, man, I don't want any more than what we have now, like in a way of life and abundance and stuff like that. Like if I were to sign in a napkin right now, this is the lifestyle that I will want to have until I die, I'll be happy with it. And that's the other thing, man, that there is so many people that they just want the next thing that somebody else has have it, right? And I'm just going to give you a quick example. The guy who wrote The Psychology of Money, Morgan Housel. I was telling Ari and we were laughing, Ryan, I cannot read a book if my life depends on. I just can't. I have never been able to read a book, but I can go and listen to a podcast forever. And I came across a podcast that he was on, and he was saying, so many of us go and whenever we are at a red light, you look at somebody driving a nice car, and the first thing that you want to be is like, I want to have that car instead of I would like to be like the driver that is driving
Yeah.
that car to see how he got there. And when I heard that, it's like, man, that's so true. Like we just want things that we see because they look flashy or whatever, instead of, hey, how did that guy got that car? Is this a guy that is, that has a lot of debt and they just want to flash out, or maybe he's the CEO of a company that has a story. Like whenever he tells you, you are gonna go like, oh my God, man, how do you do that, right? So yeah, man, I know that I deviated a little bit,
No,
but
no, that's perfect, dude. That's such a you bring up so many good points, and I think you're such a rarity in the sense that you are it sounds like you are fully content with the things you have and where you're at and where you're going. And like I said, it's such a rarity because especially in this day and age, it's so easy to just continue to want more and more and more and more, not for your own sake, just to get a leg up on the person that's in the lane next to you, or get a leg up on your neighbor, keeping up with the Joneses, that whole thing. And so I think you're such a rarity that you're able to turn that off basically. And it's something that Ari and I talk about quite a bit, something I think about quite a bit. And I don't know, I want to ask both of you guys, because that's such a hack. If you can get to that point, it's gives yourself such a huge advantage. And I just wonder, this goes out to both of you, like, how can more people get to that point? Is there something or some things that people can do to reach that point where they can turn that off? What do you guys think? Because it's hard.
Dan,
all
you
right,
want
you
to
go
chime in
first.
first?
No one wants to answer.
Yeah, man. No, I'll go. Like Ryan, I'm just gonna tell you my own,
I
because
just know
my
I'm going to
mentality
dive
is
in.
like I said. I came back from having nothing my whole life, and when I did the bankruptcy, those things got to me. So I kind of went from having nothing to having quite a bit, and
Mm,
losing it all. So I said, I don't want to go back to that place. But it is so easy, man. Now going like online technology, all these things, it's like like a double-edged sword, right? For the good side, you can see, there is a good part of it, but the other one is like you see all these people going on Instagram, living a lot of them a fake life that they don't have. Like you may see somebody driving a decent car and the bank owns that car. It's not even theirs. That is so easy for young people to kind of go, I want to be that, I want to do that, without putting in the work. And it's one of those saying that if it looks too good to be true, it's because it is, right? So there is usually like another way or another path that is more passive, that it takes time, but that's the one that people should take. So to your answer, man, it's something that, again, at some point is going to click. Because if I look at myself before the bankruptcy, I was one of them, that I
yeah.
wanted things and I was switching cars often and doing this and doing that. So I think that whenever you have lived it, like you live that part of your life, you know, I think that you can resonate a little bit better. But yeah, I don't know. I know that when you get to that mentality, nobody can take me out of that now. So yeah, that's a tricky question. Ari, what do you think?
First of all, I think beautifully said. And I'm going to go in a very similar with a very similar framework. There's a book that I read many years ago. It was Power versus Force. And the reason why I'm bringing this book up is because I have always been someone who sought power. And I'm going to get to really what power is, because it's not what everybody's thinking. And what I did for a long period of my life is use force. And there's a big difference between what power is and what force is. Now, I'm not talking about power as I'm going to dominate the world and control everything. I'm talking about the state of power, the state of being power. And Danny, you mentioned what that state is. It's being real. And there are too many people out there who are fake. They don't actually live to the standards that we see them living in social media. They can't actually afford the trips that they're taking. They are doing things to impress other people. That's all weakness. And that is someone who is not in the state of power. Now, what does it mean to be in the state of power? It means to be in the state of total truth. And ever since about 9 years ago, I started living my life according to that, right? Being in my total truth. Hey, Danny, plenty of times the other week when we were talking, you mentioned like have a reality check. And that's what I had with myself. I believe every single person needs to have a legitimate reality check with themselves, not their wife, not their husband, not their kids. Go find a mirror and look into the mirror deeply and ask yourself if you are truly being honest with your core. And are there things that you're saying that you're not actualizing on? Are there things that you want to do in life that you're too scared to do? There's a list of questions that comes with this. But when you get real with yourself, there's no more messing around. And you then enter into the state of power, right? A lot of people don't like to actually confront their problems. But when you confront your problems head on and you get really clear about those problems, you now actually have a fighting chance to solve them. And that is also a state of power. And so when we're talking now about finances, I want to feel wealthy. I want to be wealthy. And there is only one way to do that. And that is making massive sacrifices, not being fake, and putting in all the work that honestly, 99% of people out there, I'm going to say this, 99% of people out there won't be able to match that level of energy that I'm going to come at this with. Because I will die on the hill. And I'm saying that because I feel like so many people are going to share something along the lines of, you don't need to be that intense about it. But the way I look at it is life is very, very short. And so you're going to have to front load something, and you're going to have to be 110% locked in on something for a long period of time, and it's going to be uncomfortable. That's being real. And there's no other way to get to wealth other than, in my opinion, locking in, getting uncomfortable, and being real. If I can't afford a Rolex, which right now I can't afford a Rolex because I can't buy it twice. So I got to be real with myself, and that's an uncomfortable truth. I want to be able to afford those things, but I can't yet. With more time and with more, I want to say of my locked in vision, like Danny shared earlier, he said, I will retire early. He didn't say, that's my plan. He said, I will. And that means with that type of lock-in, with that type of power that he's in, that state of power, he'll get there. And I'll get to where I'm going, and Ryan, you'll get to where you're going. That's kind of my thoughts. I just look around. I'll take this from Alex Hormozy. He said, right now is the easiest time to actually become a somebody because so many people out there are just freaking weak. And I love that he says that. And it's powerful, but it's true. We got to look around and ask ourselves some real questions. Are we being weak? Are we playing too small? Are we not locked in?
So it sounds like the key to unlocking that is to do the thing that you don't want to do. It's to be introspective and look within yourself or look in the mirror and realize your own shortcomings. And then only through knowing those and being honest about what those are, only then can you rise above them and really, I guess, unlock this state of power that you're talking about. Am I condensing that right?
Yeah, yeah, yeah. So, like, when you think, again, I'll go back to just power versus force real quick. When someone's in a state of power, what they get from those around them, like, they'll walk into a room, people will say this, right? Like, oh,
Mm.
that guy's got like charisma. No, he's got
Mm.
power. He's in his state of power, and we think that's sexy. We think that's attractive. So we call it charisma. But that's power. The guy knows himself well and he's standing in it. He's he's just like flowing energy of power. When a little boy walks into a room and throws a temper tantrum, that's force. He's going to take it somehow, but it's not power. And humans respect power. When someone knows who they are, they know where they're going, they know what they want. It's hard not to respect that guy.
Yeah, it's interesting too because it's like those are things that you just kind of feel. Like you meet that person or you come across that person, it's a feeling that you get. You almost can't really like put it into words, or it's like you know it when you see it, and you can only feel it. That's just part of like the human experience.
Yeah. Oh yeah. Look, Danny
Mm.
like exudes that. I just gotta be honest, man. Like, I can look at this screen. Danny's noticeably jacked. I don't know if anybody realizes the guy is freaking massive, you know. And you can tell though, it's like he's got fitness, he's got finance. He's jacked out of his mind. But he's also, if you just look at Danny's story, it's hard not to be in a state of power after coming from nothing, crawling out of the depths of debt holes and life holes and all life's punches to build to where he is today. I mean, you can't manufacture that. That's just power.
Yeah.
Well, thanks, man. Hey, there are so many things that go through my mind, Ari, when you are talking. So, amen to you, man, to everything that you said. And Ryan, going back to those people trying to pretend something that they are not, there is one thing that I learned very, very, very young, and it was like there is not the worst lie that you can tell is when you are lying to yourself, in my
Mm.
opinion. Right. So if you're trying to lie to somebody, when you are trying to lie to yourself, to go and put in this life that you have no business living, and going in, going to bed and it's like, hey, that's what I'm showing people, that you care, or whether you don't care, it's like, man, you're always lying to yourself. So there are so many things with this. And going back to, yeah, feeling powerful. There are so many days that you walk around and your mindset and it's like, man, I'm making it in life. But it's not because I'm showing off like with material stuff. It's because right now Ryan can call me and say, hey man, let's just plan a trip with a family, and I can go, let's do it, not thinking it twice whether I can afford this or not. So for me, that for me is power, right? I'm just going to tell you a quick story how there is always somebody out there that has triple to what you think that you are telling people that you have, right? And I so often I go back to Steve Jobs. Steve Jobs used to dress like with a pair of jeans, this shirt that looks like he bought it at Goodwill, and this is a guy that has more money than pretty much half of Florida, right? So I was driving the other day and I got to a red light and somebody put next to me, they drove next to me in a nice Mercedes Benz, right? Right behind that guy, somebody in a Lamborghini went behind that guy. And right behind the Lamborghini, somebody in a Rolls Royce came back. And I look and he's like, man, look at this. If the first guy think that he's showing somebody off with his Mercedes, there is somebody behind him, whether they own the vehicle or they lease it or whatever. And if I would have stayed there maybe 5 seconds longer, somebody comes in a helicopter. You know what I mean? So the the point that I want to make is like, man, just stay in your lane, and whatever you have, be thankful that you have it, but don't go and buy stuff for to pretend something that you are not. So yeah, man, I'm sure that we can talk about this for hours, but that's the reality that we are living in today, right? So
Yeah. No, that's a
Danny,
great. That's such a.
what
Oh,
wheels were you driving?
Schwinn.
I'm actually driving the car that I'm driving now. Yeah, quick story on that. And Ryan, you and Ari have talked about this so often in your channel, and it's about people wanting things today or wanting them yesterday, not having a plan on, hey, I want to achieve this 2 years from now, and this is the steps to get to that goal and sticking to them, right? Um, One of the things that I like more than anything is cars. Again, back home in Cuba, not too many people had cars, and when I got to Canada, I changed cars more than anybody in their life. And it was not because I wanted to go and grab and buy the next flashy cars. It was just going from a Kia to a Toyota to an Acura. So I just get bored of vehicles super quick, and a very very bad thing to do. In At least in Canada, we were paying 13% taxes. So every time that you will change vehicles, you are paying 13% to the government, right? And the depreciation value and this and that. The car that I have before, the one that I bought a few months ago, it was a Hyundai SUV, which I bought it with an accident. I could have went and bought it brand new, but what I did, I bought it with an accident in the rear end. My cousin was working at a body shop, so he fixed it for me. So a vehicle that at the time would have cost me, I think, like 37,000 to buy it, I put it on the road for like 21K. So I
Nice.
went like, I like getting a deal. But going back to that reality check and putting in a calculator and think, am I going to be okay? I went like, man, now I got the bug of changing vehicles again. And my wife is like, whenever she sees me that I'm an auto trader, she goes, oh, there he comes again. So, but again, now I'm at a point that I'm ready to do that. So I went ahead and I bought almost a brand new vehicle that I'm driving now. It's a Mercedes GLE SUV. And I told my wife, looking at that calculator, and it's like, look, like we're gonna be okay, right? Now I can go and afford things that I couldn't 5 years ago or 3 years ago, just because I was prioritizing something else. So I went ahead and it's like, hey, the one thing that I would have liked is a nicer car. So I went
Yeah.
ahead and I went and bought a year-old vehicle that somebody took the hit of the depreciation of that first year, and I'm super happy. So yeah, that's what I'm driving now. But just the story of, again, man, go and do a reality check, and we do not have to have things today or yesterday. Just put your plan, and those things are going to be so much sweeter, and they're going to taste so much better when you achieve them at the right time. Because I don't know, Ryan and Ari, if it happens to you guys, but there are so many times that I have made a purchase in the past and it was just impulsive, that you look back and it's like, now I hate this thing, man. I having a payment on it, or this was not the right time. So
Yeah. No,
yeah,
very well
man.
said, man. And to your point, kind of going back to what we were saying earlier, life, yes, life is short. We have a very limited time here on this planet. But at the same time, it's also pretty long. We live a long time. And because of that, the things that you want, you don't need to have them right now. There's time to get them. And you might underestimate or overestimate, excuse me. You might overestimate how far you can go in a year's time, but you dramatically underestimate how far you can go and how much closer you can get to that end goal in just the span of a few years. I mean, in my case, I've only been investing for like 5 years, reached over $100,000 in that time. Danny, I think you really really got started on the path that you're on now, the investing style that you're doing now, only over the past like 3 or 4 years, right? And
Yeah,
so,
3 years.
and same thing, you've built an even larger portfolio than I have, I'm sure, in that time. And so, yes, it's going to take some time to get to where you want to go, but it's probably not going to take as long as you think. Number one, but also number two, when you do ultimately reach, this isn't exclusive to investing, this is so many things. Certainly see this in as it pertains to fitness and lifting weights, Danny, as I'm sure you know. You come to find that the real enjoyment, the thing that you're really after, is found in the process of the doing. It's not in getting that end goal. The end goal is nice. It's nice to have 20-inch biceps, but you get so much more out of the act of actually building that up, of taking the steps and doing the hard work. There's so much good in there that you find along the way that you didn't think you would get when you first started. But that's really what it's all about.
Yeah, man. And again, I look back, Ryan, like like last year, now I'm doing something maybe that I was not doing last year and the year before.
Yeah.
And I actually heard your story on the deep end a while ago about when you were wanting to buy a watch, the Breitling watch, right? Who,
Yeah.
if somebody would have told you 5 years ago that you were going to be thinking about buying a watch for 5K, what you would have told yourself, right? So think
Yeah.
about that, right? So it's like now I'm looking at things that I never thought that it was possible. But again, the work that you put in paid off. There was no shortcut to this unless that somebody went and bought it for you. And it's like, well, yeah, this is actually a given, right?
Which I'm open to
So
that, by the way. If there's any takers out there, it's the Breitling Top Time B39. Just throwing it out there. But no, man, that's such a great point. And to that point, I think in my life, a great example of that is this YouTube channel. If you would have told me, like 6 years ago, or let's go back a decade, if you would have told me 10 years ago when I was 22 years old that someday I'd be like, my job would be making YouTube videos talking about investing in stocks, I would have thought you were insane. I never would have pictured this for myself. And when I started doing this, yeah, I had an end goal. I wanted to eventually do this full time, and I've gotten to that point. But going back to what I was saying a few moments ago, in getting there and in still doing this today, the thing that I've realized more than anything is that there's so much enjoyment in just actually making these videos and being a presence in this community and being able to hopefully help people reach their financial goals and better their lives through that. Like, there's so much enjoyment and there's so much purpose that I get from the doing, the actual doing, more so than the end result of doing it, if that makes sense.
yeah, man. Ari, I just want to ask you, man, because you are a pure example of somebody that in their early or late 20s put in a ton of work to now living the life that you live now. So, now I'm sure that you stay at a nicer hotels that you were back then. Going back to, again, living the process and how did we all end up here? So, Ari, I want to ask you, what was that moment that do you remember kind
Question.
of when was the moment that that switch went off, that again I'm gonna be okay because I'm been putting in the work, and now I'm gonna start living life a little bit more than what I was? I think that that's such I will never get sick of hearing people's stories when it comes to that, right?
That's a great question.
Yeah. So first of all, I'll share. I come from more of the, I'll say a broken home, and I lived with my mom who was not as, financially savvy and literate as most Americans aren't. But for me, and based off my upbringing, I always, I wanted to work because I wanted more out of life. I knew that more was out there. And I said, whatever I'm going to have to do to get there, I'm going to put the work in. That led me down, some pretty crazy paths. And the one thing that really helped me more than anything was an emotional rock bottom for me. And that happened, for me 9 years ago. And I had to really say to myself, like, hey, man, if you really want to live a life beyond, you got to change everything. And like, this is not a game. And I stopped kind of flirting with the ideas that you can, go out every night and have fun and party, and kind of be reckless. And I just started honestly operating like the CEO of my own life. I was like, okay, how does a CEO run a business? Start running your life like that. Start taking your life seriously. Start running your life like it's a business, because it is. Everything that you say, everything that you do, where you put your energy. I mean, that's a CEO. Think about any CEO of any company that you admire. What is that CEO doing at 7 a.m.? They're probably not sleeping in. I mean, so a lot of those thoughts started hitting me. And when I started, I had started with a big lump sum of money that I threw into the market when I was 20. And I didn't touch it for a long time. I threw in maybe $12,000, $13,000, and I just didn't touch it. I thought that it was just going to magically grow, and it did grow. It was a total stock market fund. But then I started taking investing more seriously. And that's when I got into dividend investing, because the idea of passive income really, really intrigued me. And it still intrigues me. But what really intrigues me these days is being able to rev up that passive income machine by hitting 7 figures as fast as humanly possible, without making all the silly errors that I think a lot of investors make, investing in hype stocks and penny stocks and get rich quick type of stocks. I'm talking about finding big blue chip, stocks with history. But there was a moment that I had when I was dividend investing, and I was seeing the returns and I was liking and enjoying the returns. But I saw a Bill Ackman interview, and I could just never get this out of my head. Bill Ackman was interviewed, and he had shared in that interview, at any given time, there are only about a handful of high quality, exceptional stocks. And so if you build a portfolio of 20, 30, 40 stocks, what you're really saying is that your 40th stock is not as good as your first pick. And so why do that? Why not go high conviction, all in? And I really thought to myself at that moment, I said, that's true. At any given point in time, there really aren't, 40 amazing companies out there. And I looked at my own portfolio and I said, I do have very, very high conviction on only 2 to 3. So that's when I started cutting my portfolio. And then I started working really hard because I saw the returns really, really fast. Now, I will share this. What I did is not necessarily the recommendation for all, because you will experience swings of volatility. And I'll say that if you don't have the kahunas to sit in those swings of volatility, you lose your money because people sell out. And so I highly advise not to do what I'm doing and not to do what Bill Ackman's doing unless you are really ready and comfortable with sitting in long periods of volatility. I mean, Bill Ackman also shares a story when he was going through a divorce and he lost a couple $1 billion. The guy almost lost everything. And he talks about that being the darkest period of his investment career. But it came down to him sitting in his investments. So, I think about that, and I really I'm on the pursuit to get wealthy beyond, because I have a couple of dreams in mind that I want to build out something for others. And that's what drives me more than anything. It's to build something for kids who grew up like I grew up, and to become the person that I never had growing up. And that is my driving factor. So that drive, in conjunction with the billionaire mentality of what Bill Ackman shared, I was off to the races. And I still am. I don't know if I mentioned this to you last week, Danny, but I mentioned this to Ryan all the time. I still played small in 2025, and 2025 was a great year for me. So I'm scared of myself in 2026.
Amazing, man. Amazing.
And I want to point something out real quick, Ari, about what you said there at the very end. Because one might hear some of that and be like, this guy's never satisfied. This guy's never happy with where he's at. He's always wanting more and more and more. But I want to say, and this ties back to our earlier conversation, it's not, when you say these things, it's not in comparison to anybody else. you're not working so hard just so you can beat the next person or beat the person next to you. You are doing this because it's you versus you. You want to take what you've already built and improve upon that and continue to just evolve as yourself. Really, this is like an internal game for you. And so for anyone looking in, I just think that's important context, and that's really what it is all about. This investing stuff, it is you versus you, and I think that you deploy that to a T.
Yep.
100%, man. I read in our comments all the time. People think I'm intense. That is true. I am intense. People think that I am like cutthroat. That is true. I am cutthroat. Like I will just say it like it is. I'm direct. I'm intentional. But I am that way because I've realized at my bottom, at my emotional bottom, that like, and I really just, life ends. It just ends one day. And I don't want to end at the end of my life, be sitting there saying, could I have done more? Like, could I have actually left it all on the field? And my truth is, there were some things already when people say there's no regrets in life, that is bogus. And here's where I will get intense again. That's bogus because that's an out. I have some major regrets in my life. And I'm going to take all accountability for that and use it all as a lesson to say, like Danny said, I'll never go back there. But that switch has made me so intentional. And I get that I can be very, very intense for some people. But like Ryan, like what you said, I'm not playing against anybody else out there. I'm playing against me. So Ari yesterday was a pretty intense guy. That means Ari today needs to be a little bit more intense to beat that guy, right? And it's, for me, there's no other way to live life. I'm happy. Like today, this is the key. I genuinely love my life and I genuinely have peace of mind. It's actually when I let up on myself, I don't have peace of mind. I'm like, man, you played small, and I like playing big. I like challenges. It's fun. It's gamification for me, and it really is. You know, I see guys like Alex Hermosi. I hear when Danny speaks sometimes about like, you know, just getting up, and I'm like, I get that. I love that. And it maybe comes from my childhood, right? But it's been a fantastic journey, and I have not been more happy in my life than living how I live today. And that's what I think makes me a billionaire. The money does not make me wealthy. The mindset and the heartbeat that I get because of the journey I'm on makes me, I mean, wow, man, that makes me a billionaire.
I love that, man. And just kind of closing the book. I mean, we're almost an hour, 20 minutes into this, just kind of closing the book on this conversation. I think when you boil it all down, everything we've talked about today, there's two words that stick out to me that I think really encapsulates all of this. Number one, but the two words
Guy's
that
a billionaire.
really, I think,
He's a
encapsulate
billionaire.
this conversation are, number one, persistence. Like that is a main theme of yours, like the will to just get back up and keep pushing forward unfailingly. And number two, accountability, because you can't be persistent if you don't realize that it's all on you. It is all on you to make the decision whether or not to stay down or get back up. And so I think that if there's any takeaways for investors, for any of you guys listening out there from today, it's those two words: persistence, you got to keep moving forward, and accountability. It is all on you to decide to do that. No one else can do it for you.
Yeah, man. Well said. Well said. You know, the only thing that I would want to add to that, Ryan, is, you know, yes, go ahead, you know, give it a shot, man. Like, go and do it. And it works. If you follow good advice and you seek good advice, it's going to work. So don't be afraid to start. And I'm sure that that's one of the, you know, one of the regrets that a lot of us have, that, hey, I wish that I could have started early. So just go ahead, put your head down, put the work in, and one day you're gonna have to those kind of realize like, oh my God, look what I have now. That if you just kept adding to it, it's like in the back, on the sideline. So yeah, I just wanted to add that there. Start
Yeah.
today if you can,
Yeah.
and just go at it that way, man.
Great
I
ad.
want
And it's
to
not, it's not going to happen tomorrow, but it is going to happen sooner than you think it will. And it's also not going to happen unless you start today. So get going, get after it. Sorry, Ari.
Yep.
No worries. I also just want to share there are some amazing comments that are flooding in from the podcast that I did with Danny the other week. It's live. It's up right now as we speak. And one of the comments that came in, I mean, some of we're just being touched right now, right, Danny? Your story is hitting home with a lot of people, and so I do want to invite anybody who wants to hear Danny's like full story through and through over to Masters of the Market to listen directly to Danny tell that story. But one of these comments, it's just saying this interview really talked to me as an American who came from a third world country, which is the neighborhood of your interviewee. I salute you for picking up him because it's such a great motivation. And, Danny, you are a very inspiring, motivating individual. I think we ended the podcast that we filmed the other week with this question, but I want you to take us, at least for a minute or so here, with some inspiration and motivation for this year. How do we stop playing small and go all in 2026?
Yeah, man. I actually wanted to ask Ryan something similar to that because when you were talking, the question that I asked you early, you touched a very, very valid point for me. And is what is the difference between risk and volatility? So a lot of people think that you put money into a fund that it may be volatile, but it's not risky. Let's give you an example. Like I said earlier, I just max out both of my Roth IRAs and I put it into VGT, the tech fund. If you come to me personally, this is my very amateur opinion. If you ask me, Danny, do you think that this fund is risky? I will tell you no. It's just volatile. If you look at the graph or at the chart, it goes since the very beginning. It's just going up. How can that be risky? Now, if you cannot stomach a week or a month or 2 months of the volatility, well, this is not the fund for you. So for me, at some point, I realized that, and it's like, well, there is a big difference. Now, the penny stocks, maybe the hype of a company, that's risk for me at least, right? So what I did is like, yes, I'm going more into those tech ETF as well. I believe that tech is here to stay. And if that bubble that a lot of people talk about goes and it bursts, I'm going to buy more. So just having that in the back of your mind that, hey, volatility is one thing and risk is another one. So again, I'm just going more into that kind of mentality of I want to grow and I want to grow and I want to grow when I can. And looking into those funds, I have those kind of more aggressive, volatile funds in my Roth IRA, thinking that, hey, I'm 42. I literally have like 18 years, I think, before I can touch that money. That can go down to $5 tomorrow and to $1 million next week, and I'm not going to touch that money, right? So having that mindset of, hey, there is always, if you do your research and also whatever like stays good with you that you can sleep well at night, go ahead and do that and try to push yourself a little bit out of your comfort zone, still in a safe environment. So that's what I will say to those people, man. Like, there is always, you can push the envelope a little bit more without, and maybe you get to that next step that you go, man, I wish that I would have done this a little bit, a while ago. So maybe going back to the very, very beginning, maybe I go and I jump out of a plane and I will go back to you and say, man, I should have done this like years ago. You know what I mean? So, and Ryan, I wanted to ask you that as well, just to see your opinion on this. What do you think about risk and volatility, and how do people go and take an approach that
Yeah.
maybe they are mistaking the two?
Well, I think you hit the nail exactly on the head. When we talk about risk versus volatility, oftentimes it's looked at as being the same thing, but they're actually, as you explained, very different. Volatility is just the degree to which things go up and down and how aggressive those swings are from peak to trough. And for a lot of people, it can be difficult to stomach those highs and those lows. And on the other side of that, risk is the potential of permanently losing your capital, like the money that you have invested, it permanently being washed away. And a lot of the reason, or one of the reasons that a lot of the penny stocks, those very, very early stage companies, a lot of the reason why, or one of the reasons why those can come with so much risk and volatility is because in a lot of cases, like on a fundamental level, just looking at the business, I mean, some of them aren't even, they don't even have revenue. Like they're not even generating sales, and they're public and like taking investors' money. And there's a lot of risk that comes with that. A lot of them, I shouldn't say a lot of them, but a fair percentage of them as well aren't generating profits. They're not generating free cash flow. And so there is like inherent business risk from those companies. But that's different than volatility. Like that can show up in the share price in the form of volatility, but there's also risk attached to that. But if you look at other things like, you know, people could say that in 2025 the S&P was quite volatile. We started out the year pretty good. April we saw a pretty crazy drop, and then the back half of the year after that, you know, we saw a lot of swings back up to the upside. So it definitely wasn't slow and steady. It was you know, kind of like a roller coaster at times. But to your point, that doesn't mean that it's risky. In fact, it means that it could actually be good for you. It's something that you can take advantage of, because like you were saying, if through those periods of the downside when things are going down, that's a good opportunity. If the risk is still the same, it's a good opportunity to take advantage of that and buy things when they're down, knowing that at some point they will swing back to the upside. But I really think it just comes down as far as like avoiding risk or knowing what risk you're taking on. I think it all comes back to like an individual company level or an individual fund level. Like know what the fund is about, because some funds do have their own inherent risks. It's a whole can of worms that we've talked about before. We don't have to get into. But you definitely see that in individual companies as well. But on the other side of that, some other things have volatility, but they may not be super risky. So yeah, it definitely helps to know that difference. And I think, you know, it's also going to vary from investor to investor how comfortable you are with that volatility. If you're not super comfortable, then there are certain types of investments that you can buy into that are not as volatile. But if you're okay with the highs and lows, you know, there's something for that too. So you kind of just have to know where you're at on that spectrum.
Yeah, man, well said. And one of the biggest issue, Ryan and Ari, that I'm having now these days is I want to invest more, man. And every time that I open my account and I see it red, that's the biggest. I want to buy more and more and more. So for me
Yeah.
today, seeing red days is like hallelujah. This is what I want, right? So and I remember, like I think that Ari and I talk about this. When I look back in my 2025 contributions, the month that I contributed the most were those months that the market was red.
Mm.
So it's like now for me to see my, you know, the portfolio upside down, it's like, that's what I want, right? Obviously, it's like wishful thinking, but that's what I want. And now talking, you know, just to where you said, Ryan, the other day I sat with my daughter, I got my kids investing now. And I
Nice.
remember kind of explaining to my daughter about, hey, like the difference between an ETF, something that has a long track record, compared to maybe going into individual stocks or something that somebody goes on Instagram and TikTok and start talking about, and just tried at that early age, kind of sinking in the idea of slowly, steady, do your research. And this ETF kind of like, you know, talking about risk and stuff like that. So yeah, you know, well said.
I think those are great lessons too that you can teach your kids. It's not going to, like, speaking from experience, because my parents started talking to me about investing and kind of planting those seeds when I was maybe 12 or 13. They'd created custodial accounts for myself and all my siblings around that time. And being that age, you know, you don't understand, like you don't really care so much about investing, because I mean, you're just a kid and there's plenty of other things that are cool, much cooler than investing at that age. But still, I think planting those seeds early is very important, because as I've experienced now as an investor over these last handful of years, so many great life lessons that you learn through investing. And you know, in dealing with risk and volatility in investing, that can also teach you about risk and volatility in life. So it's a great vehicle just to learn about life. And even though as kids we or they might not understand it in the moment, at a certain point, it will start to click. And at a certain point, that light bulb will turn on. And Danny, I think you actually talked about this early on in the conversation. There was a point for you, like up until this point, you were not interested in investing whatsoever. Your retirement plan was just going to be your house. But then at a certain point, it's like somehow something was unlocked inside of yourself. And I don't remember what that was, but it was that same thing. It was like a light bulb went off and you were finally like, oh, I get it now. I get why this is important. I get why this is cool. And from that point, I would imagine like your life was changed forever, So I think we all reach that point. Um, and sometimes it's, I don't know, we all have our different ways of getting to that point. But all of that's to say it, definitely plant those seeds, even if it seems like it might fall on deaf ears today. It's in there, like it's going to stay in there subconsciously, and at some point that light bulb's going to go off and it's going to hit them like a ton of bricks, and then they'll come to you and say, you know what, you're right, I should have done this sooner, I get it now. And we all have that. Sorry to go on a tangent. We all have that. Once it goes off, once that light bulb goes off, we all say, gosh, I wish I would have started this when I was 10 years old.
Yeah.
So
Well said, man. Yep.
Ryan has been reading The Intelligent Investor to his daughter before bedtime.
in Latin. I've been reading it to her in Latin, so I'm trying to kill two birds with one stone.
Ryan, like, man, I was telling Ari this story last week. That, one of the most proud moments that I have had as a dad, and you guys talk about this a lot in, like, hey, kids are paying attention, and they will kind of maybe go to become later in life with the environment that they, that we all grew up. So the other day I'm sitting around and my daughter comes in and it's like, hey, daddy, I want to invest. My daughter is 11 and my son is 9 years old. So, and I went like, okay, I was sitting in the kitchen and kept talking to my wife, and it's like, let's see if this is just something now or it's going to stay with her. A couple of days later, she come and is like, hey, dad, like I told you that I wanted to invest. I'm ready. I have some
Yeah.
money that I want to invest. We sat on the couch, talked to her, about ETF and the difference between an ETF and a company and this and that. And it's like, okay, let's do it. Tomorrow morning, I'm going to open a custodial account for you, and we're going to do it. Next morning, Ryan, I went to her bedroom to get ready for school, and she pulled out $300. And it's like, here, I'm ready to go. And that night before, I told her, hey, you know what I'm going to do? I'm going to be your 401k match. Whatever money you
I
give
love
me,
that.
your mom and I are going to match it. And for her to kind of see things a little bit quicker. So yeah, that day I opened an account for her, my son. My son, 9 years old, not too much. He just wants to come along on the ride, and he's like, "Hey, I'll give you $45." So I put 90 into that account, 600 on my daughter. The months after that, that was in December. January 1st, I went to them and it's like, hey, it's a new month. You have some money to give me. So they got some money for Christmas and they gave me some money. I did the match. So now they come in and once in a while they come and, hey, daddy, how's the investing doing? You know what I mean? So
That's
yeah, it's just
awesome.
going back to they are listening to us, and whatever we the life that you have in your everyday life, sorry, the topics and whatever you talk about, these kids are listening to you, man. So
Yeah.
super proud to say that they are now investing and stuff like that. So
I don't blame you, and honestly, that's a really good lesson for me too, as a new parent myself. That's really, yeah, I think that's a really important lesson for me to understand as well. Thank you for sharing that. That's really cool.
yeah, man.
With that, I just want to say, Danny, thank you again for joining us here on the Deep End, inspiring, impactful, and motivating story. Ryan, we hope to hear what the next chapter of The Intelligent Investor you've read to your daughter was in the next
I think it's
episode.
on. I think it's on growth. I think it's on growth stock. So you'll be interested in it.
Just play the podcast for. This is the crazy
Yeah. Yeah.
podcast
Exactly.
co-host that I work with. But to each and every investor out there, thank you for tuning in and joining us for a whole hour and a half or so. Comment down below with some of your thoughts, with how crazy you think I am, how powerful Danny's story is, Ryan's insights. Let us know how we did this episode. And to each and every investor, until then, Right, you got one more thing?
Yeah, I just want to say thank you for closing us out. I want to say I'm going to put in the end screen, should be up on the screen right now, is the conversation, the Masters of the Market conversation between Ari and Danny. So you guys go check that out next. That one's on deck. Yeah, and thank you. And we'll see you in the next one. We'll close it out here. Have a good day.